So in other words, the bid-offer spread is real. So that's one of the things you've got to then look at and say, well, the spoof should be on outside the bid-offer spread. That seems reasonable. Now, obviously, if that's the case, then the current S&P should be going higher because it looks like the big spoof is on the sell side. Isn't that interesting? And what's just happened to the S&P? It's just gone higher. So let's take a quick look at it in terms of, we're looking at it in terms of net volumes. I've just used a 700 trade volume narrative so that we kind of get consistent candles to see this in, so that we've got some sort of volume concept. In other words, the volume traded, number of trades traded, not the same, but it's roughly the same. So we can obviously see this storyline here. Take a look at the yellow line. Now, the yellow line is 2 to 5. The white line is 0 to 1. Interesting, isn't it? So the yellow line is 2 to 5. The white line is 0 to 1. So what does this look like here? Well, obviously something's wrong in this area, isn't there? There's something completely wrong about what's happened in here. Because obviously the 2 to 5 has gone very offered. Sell side, sell side, sell side, very offered, right? So obviously in that kind of environment, we can then recognize that this therefore looks like a spoof. So obviously we then see the change at the bottom edges. We see a change at the bottom edge. They're trying to spoof some sellers into this market, and obviously their job is then to buy against the sells that do come in. Because you can see the inside book is actually holding on to the bulls. Do you see that? Top of the market liquidity is actually bid here. So with top of the market liquidity bid here, you're then looking at that saying, wait a second, they're trying to spoof the bottom edge here at 55. If this market goes bid at 55, I've got proof positive that this spoof is now in place. And obviously the proof positive that the bid is in place turns out to be a very, very strong pop to 63s here. The white is 0 to 1. So it's the top of the market, Reeve. It's the top of the market. Now, the top of the market has to get filled, right? I mean, the top of the market is, you would imagine the top of the market is the most honest line you've got in the charts. Would you agree with that? Because obviously the idea is that you're wondering whether there's going to be the potential. But let's just think about this. So when we're looking at a bid offer spread, you're all aware of what this is, yeah? You're all aware of depth of market. Does everybody know what a depth of market is? Everybody knows what a depth of market is. Okay, so what is this that I've drawn then? Obviously, this is the ask or the offer. Where the hell does it keep default to 140? What the hell? So we're going to offer Tom at this price, right? And obviously, we're at the bottom edge here. We're going to then bid this one. Okay, so we've now got the top of the market bid, and we've now got the top of the market offered, yeah? Obviously, what happens on these prices is you would imagine is going to be real, because obviously this is the top of the market. This is the current bid and offer. It's very difficult. You know, if you're trying to spoof a market, you generally don't spoof the market at the top of the market book, right? Because you're going to get filled. So it's a kind of crap spoof unless your intention is to drive the price by getting filled. That's obviously something that you might be doing. I mean, it might be a genuine attempt to trade higher to get the higher price, but obviously that means you've got to ditch your buys to then sell it before you can get net short. But it might still be real. It might still be real. Now, obviously, once you move outside of that top of the market, of course, now you move into the twos to fives, don't you? And obviously, the twos to fives is this area here. So you've got your twos, you've got your threes, you've got your fours, and you've got your fives, right? So you've got your twos, threes, fours, and fives in these areas, don't you? Yeah? You've got your twos, your threes, your fours, and your fives. Now, obviously, if we're looking at that chart, you'd have a look at that and say, wait a second, there's something unusual about this. You know, the outside market is very bullish, but the inside market's bearish. So what you're then looking at is you're then looking at that saying, is this a spoof buy trade to get short? You see what I'm seeing? Could this be a spoof buy trade to get short? Now, obviously, we need to still see the candle being absorbed into those areas because we need that offer to be refreshed. It might just be the way it is at this point. So we're obviously wanting to see the same elements in terms of your tape. But obviously, the idea here is that these buy orders are unlikely to be filled because they're far enough away, being 2 ticks away, they're far enough away for the algorithms to pull these bid orders, aren't they? They're far enough away that they don't get traded. So they've got the chance to cancel those orders, and that opens the door to the sell then coming through the hole, right? So obviously the idea is that, if they all agree with each other, it should be dead obvious. We're going to go long into the market if they agree with each other. But obviously if there's a difference of opinion between these, and there was quite obviously a very big difference of opinion in this area here, it looks like there's a lot of sells trying to spoof the market here on the twos to fives, whereas the 0 to 1s is buying this area. And obviously the twos to ones have taken the market up here to 63, 64 from a buy trade at 54. Does that make sense to everybody? You'll see the difference when both markets are bullish. When we look at the NASDAQ here, for example, you see how both markets are bullish? So the twos and the 0 to 1s and the twos to 5s are both bullish here, giving you a very strong sense that there's probably a buy trade in here, and there's probably a buy trade in here, and there's probably a buy trade off that Baltic. So they're both bullish at the same time. And obviously, therefore, there's no suggestion that there's maybe a spoof taking place. So obviously, if there's no suggestion that a spoof's taking place, then you can have a look at that and say, okay, well, it's real. Well, I mean, those buy orders look as if they're reasonably correct. I'm expecting the buy orders to play out here, and you can see that they actually refreshed the order book, and that's what you're looking for. If they're refreshing the inside marketplace here, top of the market here, if they're refreshing the top of the market book here, and we know they are because the price is going up, so they must be adding buy orders during that period. That must be bullish. And we get this nice buy side pop off of that level, now driving 21,700 up to 21,730, which is obviously a $600 winner just from seeing that one bit of order flow appearing at that point, which is kind of priceless, really. Kind of priceless, really. Beautiful.